This show should be very interesting because we have two very dynamic speakers today. One is a sponsor of Lakehouse, Oakland, Michael Johnson, who is the CEO of Urbancore Development. Michael has a lot of experience in the industry, and he's going to share his insight on the development of Lakehouse. Also, we have Kyle Fry, who's the president of Exponential Group. Exponential Group is a digital asset company just put together a $150 million digital fund. And we thought by having these two gives you a better perspective on what's happening in the digital world. So looking forward to it. Let's get to it. Our guest sponsor for today is Michael Johnson. Michael Johnson is the CEO of Urbancore Development. He and his partner, which is National Advisors, are the ones building the Lakehouse Oakland project. This is a 26-story high-rise in the CBD of Oakland, California. This project capital cost is roughly $232 million, of which Red Swan is raising a $40 million equity piece in two different tranches. I'm happy to hear from Michael because he has done a lot to bring this project to fruition, and we'd like to hear his feedback and content on his vision for Lakehouse, Oakland. Please welcome Michael Johnson. Good to have you, Michael. Welcome to the Digital Deals program. Tell me, how does it feel to be the developer of the next preeminent high-rise coming into the Oakland, California landscape?
Well, this is a great opportunity. Urbancore has been in the real estate development business for over 40 years. We have done transactions throughout California and the Bay Area. But this Lakehouse project really, we believe, is our legacy project, primarily because of the scale of the overall project. This is a $300 million total development project. There's been a very intense process to get this project entitled, and we will be accomplishing something which there are very limited opportunities to do, which is to build a high-rise building across from Lake Merritt, which is really one of the preeminent sites in the Bay Area.
Well, Michael, you took the time to pre-record the highlights of this project, and we videotaped that and we added it to this presentation. So let's watch this right now.
Hello, my name is Michael Johnson. I'm the president of Urbancore Development. I'm here today to talk to you about the opportunity to invest in the Lakehouse Tower project. Lakehouse is a mixed income project including 361 units. Lakehouse will be developed in two components: a 270 unit Class A apartment building that will be 26 stories and a 6-story affordable component that includes 91 units. The focus of this investment is the 270 unit tower. The tower will be undertaken as a joint development between my company, Urbancore Development, and National Real Estate Advisors. National Real Estate Advisors is a national developer with extensive experience undertaking apartment transactions in San Francisco. National is also a pension fund advisor for the Electricians Pension Fund and will be investing in this project through their affiliate Endure. The total project cost for the tower is approximately $232 million. The capital stack for this will include a $134 million HUD FHA loan, together with $25 million from Urbancore and National as the general partner sponsors. This investment opportunity includes the additional $70 million of equity that we're raising to fill out the capital stack. The project has received full entitlements and is a shovel-ready transaction. We've already applied for building permits, and we're in the process of finalizing our construction GMP budget with Clark Construction. The plan is to close the financing and equity by November 15th, 2020, and start construction before the end of 2020. This is a unique investment opportunity because this shovel-ready transaction will be one of the few transactions that is actually starting construction in 2020 and then will be delivered in 2023. We completed a market study with the Concord Group. This helped us formulate the program for the building. The 270 units includes a combination of junior one bedrooms, 2 bedrooms, and some larger 3-bedroom units. The average rents for the project will be $4.90 per square foot per month. This will result in a range of rents from $3,000 to $5,500 per month. These rents are supported by existing high-rise properties in the market. They include 1200 Lakeshore, which is across the street, 1700 Broadway, which was recently completed by Lennar, and the Atlas, which was recently completed by Carmel. These properties are currently leasing at rents from $3,000 to $6,500 per month, which supports the proposed rents within Lakehouse. Lakehouse will have unparalleled views of Lake Merritt, including views of the downtown Oakland skyline, San Francisco, and the Oakland Hills. Lakehouse is being positioned as a luxury apartment building. This will include a full array of amenities, including a business center, theater, fitness center, yoga room, a swimming pool, a pet relief area, storage, as well as a 20th floor luxury community lounge. Finally, the timing of Lakehouse is perfect for the sponsors and investors. Starting construction at the end of 2020 and completion by mid-2023 will result in Lakehouse being one of the few new Class A transactions built in the market. This will position us to capture the rental market because there will be limited new product at that time in the market. This investment opportunity has a 5.5% return on cost, a 6% cash on cash return, a 12% IRR, and a 2.5 multiple. One of the important aspects of the Lakehouse Tower is the design of the project. With a smaller footprint, all of the units will have very convenient access from the elevator core. Tower is being executed by the architecture firm of AVRP Studios, which is headquartered in San Diego and Vancouver, where they have completed numerous award-winning apartment towers. The project is being built by Clark Construction, which is one of the largest general contractors in the country. The project will include floor-to-ceiling window wall along with metal panel on the exterior skin. The interior finishes will be condo-like both in the common areas and within the units. One final bit of information. As I mentioned, this is a mixed income transaction. The focus of this investment is just a 270 unit tower, but we are also building in a partnership with IBALSI, the East Bay Asian Local Development Corporation, which is one of Oakland's largest nonprofits. This will result in a mixed income community with 30% affordable, which will be one of the largest mixed income projects in the city of Oakland. This combination will result in a vibrant community for residents of both buildings. IBALSI has already completed the capital stack for this portion of the project, which is a $70 million transaction, including tax-exempt bonds and 4% tax credits. Thank you for the opportunity of presenting this investment opportunity to you. We think this is going to be a great project within the city of Oakland, and we look forward to your consideration to become an investment partner with us. Thank you.
So let's talk a little bit about Lakehouse being shovel ready. We think that's a major attribute over the competition. Please explain to us, how you feel this is a major barrier to entry.
Well, the process of getting to a shovel-ready project has included several years of advanced work. We had to compete for the site, which is being sold to us by the city of Oakland. We then had to go through a planning process to get the site entitled, which basically includes the city planning commission reviewing the design and the program for the site. We have as our design architect, the firm of AVRP Studios, which is headquartered in both San Diego and Vancouver. They have done quite a few high-rise award-winning properties in both areas. And that, their experience helped us with the design process and getting the entitlements approved. Once the entitlements were approved, we've now been going through the process of arranging the financing. That concluded with the award of a firm commitment from HUD for our $134 million HUD FHA loan in May of this year. And we are completing the process with the city of Oakland for our permit review so that our permit will be ready in September. All these things are lining up for us to close our financing in November and start construction of the project at the end of the year.
Awesome, awesome. Location means everything when you talk about real estate. You've put a lot of time and effort to finding a great location based on demographics, based on transit, based on CBD activity and lifestyle. Do you consider this to be a core location for the Bay Area? Well,
you mentioned location in real estate is everything. You have multiple properties that are competing for tenants, particularly in the luxury category. But we think this is really the premier site because it is directly across from Lake Merritt. It's tantamount to being across from Central Park in New York or on Lakeshore Boulevard in Chicago. There are just some sites that have a premier location to them because of their surrounding amenities, and the views of Lake Merritt in itself are just spectacular. That's really how we evolved into the name of the project, which is Lakehouse. People aspire to have a house at the lake, and so this will result in them having a house or an apartment at the lake. You not only have views of the lake, but the downtown Oakland skyline, the Oakland Hills, and then San Francisco off to the west. So the lake has gone through a multi-million-dollar improvement program over the last several years. So the perimeter of the lake is lined with walking paths, increased landscaping, and it is really one of the premier locations for people to exercise, ride their bike, walk around the lake, push a stroller. In the lake, they have, sailing, they have crew activity for people rowing. There's a premier restaurant right on the lake. And so all of these amenities are within walking distance, along with, we have access within a 7-minute walk to the rapid transit system that will provide you access to anywhere in the Bay Area, from the southern portion where Silicon Valley is located into San Francisco. So we really think that this is a premier location. It's also a great lifestyle location that will provide tenants with a really good living experience.
COVID-19 has really upended the lifestyle, the finances, and the economic factor of many people. Hopefully you and your family and your friends and loved ones are safe and comfortable. But I'm wondering how you have maybe augmented your plans, your design specs, or the outlook of Lakehouse based on being in this COVID pandemic.
Well, we haven't made any alterations to our plans, but we believe I think fortunately our building was designed in a way that will allow the tenants to recognize the opportunity that people in the future, as a result of this experience, will probably be working from home a little more often and socializing at home. And so we've made a decision with the Concord Group, which is a marketing firm that helped us program the design of the project, to make our units larger than the typical units that are being built in the market. Many of the other developments have a much smaller average square footage for their studios, 1s and 2 bedrooms. Our units on average are probably 10 to 15% larger. The average unit size within the building is 960 square feet, compared to many buildings where the average is 750 square feet. And so that translates into slightly larger living areas, slightly larger kitchens and closets and bedrooms. And as people are spending more time home, it gives them that extra room. We also chose not to do studio units. We have junior 1 bedrooms, 2 bedrooms, and unlike many buildings, we also have a stack of 3-bedroom units running through the entire tower. So this gives us a range of options for people to rent. And when you combine that with the amenities in the building is really self-contained. You can conduct your business at home, utilizing our very large business center that's located on the first level of the building, which also has views over the lake. We have community space rooms where people can, sit and use a computer and access Wi-Fi that's available throughout the building. Or you could even take your computer or laptop or iPad out to the pool or out to one of the outdoor seating areas. And if you're really looking for a fantastic experience, we have a 20th floor luxury lounge, which will be available to all tenants that people can reserve a chef's kitchen, a screening room. So there are a lot of amenities in the building with the unit design. We believe post-pandemic will make the building more attractive than other assets in the marketplace.
Thank you. Looking at some of the cost factors and also reading the statistic data on development in the area, COVID has slowed down a lot of projects that were set to not come out of ground, but at least get started and get financed. How do you think this might affect the costing of Lakehouse based on what we're experiencing right now?
Well, I think COVID over the last 5 months has really slowed down the construction lending market for new ground up construction, which is why we were fortunate to have chosen a path of seeking a HUD FHA loan. That approval in May is a real big accomplishment for us and provides us with, approximately 60% of the capital through that leverage loan. There are probably other transactions that we're anticipating a start at the end of this year or the beginning of 2020 that will be challenged by the inability to find construction lending at this time. So combined with the equity raise that we're underway with now, this gives us a market advantage in that we'll be one of the few transactions that goes in the ground at the end of this year, and then we'll be coming out of the ground for new occupancy in mid-2023.
Do you think there'd be some economic savings based on the fact there's less product construction activity in the marketplace?
Well, we may realize that over the next 30 to 45 days. We're actually in the final stages of the buyout of our GMP contract with Clark Construction. Right now, there is less pent-up subcontractor activity that they can book for 2021 and 2022. And so of our total project costs, we're talking about writing a $170 million construction contract, which is made up of 20 or 30 major subcontractors. And so we do believe that there may be a potential for some savings. The current returns are not based on that, but if we achieve that over the next couple months, that will also help to boost the returns that will be available to our investor team and our sponsors.
Appreciate that. We also appreciate the fact that you and your sponsor or your partner, National, have given Red Swan an allocation to raise up to $40 million of your $94 million worth of equity. Is it possible you can touch on some of the institutional interest that you have in the asset in terms of investing in the asset right now?
Well, our capital stack, in addition to approximately $25 million of sponsor equity, will include, another $30 to $40 million of institutional investment. And that capital we're finalizing now. It provides an opportunity for Red Swan to capitalize through your platform at least an initial $20 million within the capital stack that will allow smaller individual investors to participate in a Class A institutional grade investment that typically doesn't come to market for the smaller investors. And so before going out and seeking additional institutional investment for that last chunk of $20 million of institutional capital, we're happy to partner with Red Swan and to raise that through the Red Swan tokenization platform. As a company, as a joint venture team with National, we tend to think of ourselves as forward thinking. And so we like the idea of a creative approach to this as an accomplishment, along with all the other things that we plan to accomplish with this project.
Thank you. You know, I think about demand in the area, and you know what's happening. What we're seeing happening right now in the Bay Area is a lot of flight leaving San Francisco and coming over to Oakland. So you probably have put this together at a very opportune time to receive a lot of traffic coming from San Francisco, which will actually reduce their costs of residence costs and improve the actual rents in Oakland. Do you feel this is going to continue and that the Lakehouse will actually benefit greatly from even more than the conservative rents you've already outlined for Lakehouse because of this?
Well, I think that first, we've seen a lot, I wouldn't say it's flight, but we've seen people, you know, relocating from San Francisco to the East Bay, to Oakland, mainly because of lifestyle. Oakland has been defined recently as sort of the new Brooklyn, because it's a city that has a lot of diversity. It has warmer weather, on an average of 5 to 10 degrees than San Francisco. That diversity, it also includes a lot of, you know, smaller commercial districts that have their own character. And it is also it's also a community that has smaller families. So you find that some millennials who are developing into a point in their life where they're having a family, Oakland is much more suited for that. There's much more open space. It's not as crowded. And so those are many of the benefits. And then additionally, San Francisco is probably the most expensive city, you know, in the United States, comparable, if not exceeding, New York, both in terms of rental apartments, as well as condominiums and single family residents. And so people are finding their dollar goes a little farther in Oakland in terms of the opportunities that they have to invest. We have a considerably improving public school system, and then there are a lot of private school options that people are interested in Oakland as well. So overall, it has taken a while for institutional capital to recognize the opportunity for Oakland, and now we've seen over the last several years, all of the institutional players are here in the city investing in ground up transactions, both residential and office. And that's exemplary of the fact that just recently, PG&E announced they were moving their headquarters from San Francisco over to Oakland. Coincidentally, diagonally across from us in a office building that's on the northwest corner of Lake Merritt.
No, I totally agree with you. As a former resident of the Bay Area, I lived in San Francisco as well as Oakland. I moved from San Francisco to Oakland, lived right on the lake, and that was one of the highlights of my youth, being right there with all that excitement, that cultural diversity. It was more affordable. The weather was much more comfortable. So I think that you picked an excellent location to build your project, and I think the timing is also perfect for what we're seeing in terms of trends, in terms of our rents. I want to invite. We're going to go ahead and move into our Q&A, and so I want you to just kind of hang in there. We're going to meet up with Kyle Fry, and we're going to get some questions from our audience, and I'd like you to participate. So. Thank you for participating in the show, and I look for you to just wait so we can finish up on our Q&A. Our guest for today is none other than Kyle Fry. Kyle is the president of Exponential Group out of Canada. Kyle and his CEO, Mr. Wallace, have put together a very large organization, but they're centered around a digital asset fund. I know they're raising about $150 million to buy directly digital assets so that their investors will have a chance to participate in all types of digital assets. We look forward to Kyle's participation because, once again, he understands the digital nature of our business and the kind of product that Red Swan is bringing to the market is exactly the type of product that Kyle and his company, Exponential, will be off-takers for as our accredited investors. So we'll look forward to what Kyle has to say. Please welcome Kyle Fry. Well, Kyle, hey, thank you for coming on to the show. We really appreciate you being here. I was excited when you accepted to come on board and join us today because you bring such a perspective to the business that many people are not aware of in our industry, which is the commercial real estate industry. And I wanted to get your insight on Lakehouse, but also on digital assets, alternative investments in general. And with your background working with Exponential, you're seeing a whole different world of investment opportunities that I'd like for our audience to kind of understand, because that's really where I see the future is going. And many people in our business, because you think about the real estate industry, there is a lot of, the average age of ownership is about 60 years old. And so many people are kind of dumbfounded about digital assets in general. So by you laying a perspective on what Exponential is doing, how you guys are involved in the industry, and also what you're looking to invest in with your fund are very interesting topics for this audience. So welcome.
Great to be here.
So aren't you pretty excited about this quality of product that we're bringing to the marketplace?
Yeah, I mean, the first time I read about what you guys were doing at Red Swan, I think it was probably 6 to 8 months ago. I knew you were immediately the type of person I wanted to get on the phone with from what you guys were doing. What we're building, we're a global fintech firm. Overall, what we're trying to build is bringing investors and issuers closer together. That should lower the cost of capital, make transactions easier, and make it easier for people that didn't have access before to certain investment opportunities, more access to those investment opportunities. So when I saw you guys were actually making a move, and what the industry I think got wrong, what you're getting right from the outset, which again is why we pursued having conversations with you at Red Swan, was a lot of people approach this initial dynamics of digital from a technological standpoint. And you can't just throw technology in the mix and all of a sudden become a commercial real estate, for example, expert, because you got to know all the nuances of the buying and selling, pricing, all the dynamics of the things you've spent significant decades doing. The technology is really just enhancing that aspect. And so, we see the digitization of everything as the next phase of the capital markets infrastructure. And again, because for several hundred years, for more decades, there hasn't been a lot of technological change in the way to invest in capital markets. And now with blockchain technology, we actually have that access. And now folks are just kind of bringing this in. So meeting you guys, talking to you guys, and recognizing that, I think one of the gateway investments, frankly, for people to really understand digital, because I think a lot of people are still saying Bitcoin this, Bitcoin that, and they hear there's a lot of negative sentiment, is real estate. It's a real hard asset. You're literally owning it through a digital security or a digital token instead of a piece of paper, which makes it more portable, et cetera. But the reality is when we're talking to investors and family offices, as they hear about the headlines in digital and what's going on, they start to think about, I want something that's asset backed. Well, everyone knows and wants real estate, right? It's the largest asset class in the world, and knowing Class A. And so it's the best sort of initial investment for folks to get comfortable at, just like email and the internet, when everyone started picking up these technological tools and using them and putting their credit card information online. It's the same thing here. You don't have to understand blockchain. You just have to know what you just acquired was cheaper because the cost of capital is lower, and it's more portable, making it more liquid. And it was giving you now access, because you guys are giving access to accredited investors to a piece of investment that was only available institutional investments before. And that's literally what this whole paradigm is about. So we're extremely excited. For us, I'm not a commercial real estate expert. I'm not a real estate expert by any means. You and I joke and talk about that before, but that's why I want to engage with you, because you're supposed to be. And I would love to have those conversations with you on what the right assets are, because for our investors, they want us to find digital, high yielding asset classes. And then, so I'd come to you guys to start talking about, some of the supply.
No, absolutely. And appreciate you laying that out for us, because you're absolutely right. The adoption into technology was a slow process for many years. But I think people are starting to realize, especially with us being in this pandemic, the value of being able to have online access to investments. I've been in the industry for over 18 years and worked with many, both large institutions as well as small private accredited investors. And the change is that you see most of the smaller investors are buying assets that are really higher risk because they don't have that access to the high quality product that like what we're advertising today, the Lakehouse. They usually don't get invited to the table to participate on those kind of deals. So we're excited about that. And we're also really working with you and others, making this process very easy. I think that people spend a lot of money chasing after deals, touching properties, talking to sponsors, and doing a lot of due diligence. But you can burn a lot of time, a lot of money pursuing properties. We're trying to make it really easy by bringing high quality properties to the table. At least have a certain allocation where investors can buy in at a very, very affordable price. Starting as low as in some cases $5,000 for a high quality institutional asset. So you're absolutely right that this is something that the world is getting comfortable with, something that the world needs. And when you look at the digitization of like cryptocurrency, for example, that's been with us for quite some time. And there's been a lot of volatility with the holders of cryptocurrency. And now they have a chance to really stabilize their volatility by investing some of their digital currency into digital asset securities, which I think is phenomenal. And I'm so glad that we're both here to help make that happen. One other thing you talked about that when we were on the phone a few weeks ago, you mentioned some of the impacts that Exponentials is trying to accomplish by getting into the alternative asset industry. Maybe you can touch on some of the impacts that you see, how this is going to affect the average investor.
Yeah, I mean, the same thing you're doing is you're giving access to a previously, unable to invest in asset class by institutional only to accredited investors. Not only will digital make this better and easier, but if you look at all the secular trends, there's so many tailwinds towards the direction of where we're going. One of my favorite quotes from the former chairman of NASDAQ, and he said this 2 years ago, that all the stocks and bonds on Wall Street will be tokenized in 5 years. He said that 2 years ago. And so you can think about the shift over there. But if you look at all the secular trends, the accreditation rules are changing, right? Becoming more inclusive, a bigger group of investors. Crowdfunding rules are going from $1 million for a company to $5 million for a company. And there's a lot of shift in regulatory. If you look at the DTCC, for example, their entire business model is based on the trading of public markets. They trade 2 quadrillion in terms of dollars in a year in terms of turnover on shares. They're shifting and have announced 2 large projects, one in digitizing everything, because the DTCC their business model starts to go away when you use blockchain technology, as well as looking at the private markets and making the private markets more liquid. And I think a lot of people say, oh, our public markets are efficient, or, oh, private markets, putting it on the blockchain and putting it on exchange doesn't help. But it's not about taking it completely to public. It's the spectrum of liquidity and allowing people to get in and out and invest. I think we're not quite there yet, but obviously the bigger dream of blockchain technology and just the tokenization of things is, art, sports cars, memorabilia, income sharing agreements. I think, there's some NBA players that we're looking to tokenize as well. So the technology is really opening up access to really interesting opportunities for investors of all generations, right? And most of the capital markets infrastructure has been kind of to an older generation. Everybody's kind of joking, oh, the boomers and the retirement versus millennial and Gen Z. But the reality of it is that this will open up an opportunity to invest in all sorts of things. And cryptocurrency is one thing that came out of it that's completely and entirely new, because it's an asset not tied to any government, not tied to any banker, not tied to anything. The value of it is no one can control the value of it. It's purely supply and demand based on community. So opening up those sorts of investment opportunities for people to diversify. And to your point, I think you mentioned a very key important point, that I think a lot of people miss, whether they're capital markets experts or technologists, et cetera, is making it simple. And simple doesn't mean that people don't have to be educated and sophisticated in order to make decisions and understand the risk at which they're investing in, but making it simple that when they're ready to buy, they buy. They're not filling out a bunch of documents. They're not getting anyone on the phone if they don't need to, and just making it super simple through your platform and the platform we're going to build is just making it simple. And a lot of it's on an app too. I mean, if you look at the way Robinhood has taken off, which I think it's taken off way more than we expected, is people are sitting in their homes. They're not able to go to sports games anymore. They're not gambling on sports anymore. They're not going to Las Vegas. So are people entering the stock market? And, it made it easy. There's some pros and cons to that for sure. And I think Robinhood's taking some heat to figure that out. We obviously, we take the onus personally to educate our investors, and, sophisticated investors, and most of the ones you're talking to are probably educated from a risk perspective. They know asset class and they know, differences among asset classes. But in terms of how digital technology works and how I can actually make this new thing liquid that wasn't liquid before, these are all new learnings that will actually impact the price today and how people think about investing. So although folks are, sophisticated in terms of their knowledge on how to invest and when to invest and what assets in commercial real estate, there is a little bit of an educational paradigm as well. Again, you don't have to understand blockchain technology. Trust me, you don't want to go down the rabbit hole unless you really want to. Happy to explain that. But you do need to understand the implications of creating a digital infrastructure and what that really means to the asset you're investing in. Does it make it look more liquid? What does that do to the cost of capital? Which, if you lower the cost of capital, doesn't that increase the value? And so all these things sort of play, but you need to understand the implications of things going digital back onto the original asset.
Yeah, no, you're right about that. I really think that the crowdfunding aspect of what we're doing is giving the individuals, whether they be clubs, organizations, or even citizens in the community, or nonprofits or family offices, the ability to crowdfund into high quality assets that they're targeting. I mean, this has never been done before. Typically, power controls all of the major projects that are very profitable, very core in various areas, because they have the capital. They can write those large checks. But now smaller organizations can actually target certain properties and invest in those properties to take ownership interest. And they're really taking advantage of the high quality management on those properties, and also the level of investors are also part of that capital stack. This is unprecedented, and I think people are going to be very much appreciative of it. The other area where we saw a lot of pain point for investors, and I think is one reason why many private investors have stayed out of real estate and rather focused on stocks and bonds, is because of that liquidity. Being able to buy into an asset in real estate and not having to stay in for 5 years or 7 years or 10 years is a major benefit. Liquidity is a fear for some investors because they never know what life-changing experiences they may face. And if they need to get out, it's always good to have that option to be able to get out of an investment at a market price as opposed to being locked in. And I think the speed in which we're creating for transactions is also very important, because you can now move according to current market conditions as opposed to what happened in the past. So if you see things are happening, like right now, we're going through some significant changes in the real estate industry with the COVID. And, to get out 6 months from now, you never know where price you're going to be at 6 months from now. But if you can start exiting right now, that's a major advantage for, holding on or securing your investment. So I think we're on the right track, and I'm glad that we're out here cheerleading this to the rest of the world. But I do feel like people are catching on. The phone calls we're getting right now, the properties are coming to us, is overwhelming. I do want to ask you another question, though, regarding your fund. You guys have been putting a lot of time and money into this digital asset fund. What is the size of the fund right now? Where do you want that to be? What's the goal and the objectives of the fund? And what type of project specifically are you looking to invest in?
Yeah, that's a great question. Our fund right now is at $11 million. We're targeting 100. we probably have another 10 to 20 in conversation right now with various family offices and institutions. And look, at the outset, we my background's investment banking. I know capital markets. I've spent time in the capital markets and investing, and we have a venture capital fund is really where we started. But what we wanted to build was this infrastructure to allow digital securities trading, and so we've become experts in digital securities laws, et cetera. The reason we ended up creating a fund is because a lot of times you're talking to investors and how they can diversify and how it helps them and how can they invest into, because I think people are shifting their mindset as well and recognizing that you can make a great high return investment, but also change the world for the better. And because of our focus on fintech and financial inclusion and the way we invest, a lot of the conversations with investors have morphed over time. They're like, oh, I'm not quite comfortable with this. I invest this way. How is it cheaper, better, faster? And you have to walk them through it. But ultimately, what ended up is we created the diverse digital asset fund because people were asking for ways to get in, but where they felt comfortable. I think in the ways that you can invest in digital today, it was heavy on the crypto, heavy on the venture capital, which is accredited only, by the way, but most of these are accredited or institutional conversations, but they wanted something that they understood at the outset. And so the digital asset fund we created is meant to be approximately 30% real estate as the kind of anchor, because as I mentioned earlier, that's sort of the asset class everyone gets and understands. If the blockchain technology goes to zero, you still own the building, which it won't. But like same thing, if the paper share gets destroyed, you still own the building. There's an asset there. It's not going away. It's a hard asset. So we knew that, heard that from people, and 30% there, 30% venture capital, because if you read anywhere, there's obviously a starving push for alternative investments, and everyone's increasing their allocation in alternative investments in their portfolio. And then the rest was sprinkled in with cryptocurrencies as well, predominantly Bitcoin, or it would probably be all Bitcoin because that's the safest asset. But people wanted exposure there too. And so we created this digital asset fund, which allowed, like I said, sort of this gateway investment where it was these things people understood, gave them exposure. And on the outset, you don't need to allocate of 5, 10 or above percent. I'm talking like 1, 2, 3% into this digital asset fund to kind of get your feet wet a little bit on that digital is better. And you'll see that. On the real estate side, we want it to be the highest quality stuff. This is kind of class A. We have a company we're working with in Canada that's working on the retail side of real estate. And, the conversations, Ed, you and I have been having on Red Swan on what's the right way, when do we engage in terms of actually investing on the commercial real estate side. That's a conversation you and I have continued to have. But I think, North American real estate, US commercial real estate is pretty exciting. And I think for us, one of the big things we're trying to do, and this is the technology backend that we're trying to do, and we're taking all of our regulatory and our technology blockchain understanding to, is the securities trading side of it, listing things on exchanges, bringing global pools of capital, allowing that Malaysian investor to invest in something like the Lakehouse property. Eventually, when you're bringing these other pools of capital, that should open up an entire world of asset price appreciation, more liquidity. And just as we think about it, at the end of the day, all of these things are doing is just bringing the issuer and the investor closer together. Not as many middlemen, not as much money getting chased out of the system, so that the value creators of any asset, whether it's a building or not, are getting more and keeping more of that value versus this entire chain that technology, the blockchain technology, is allowing to keep between these two, as issuer and investor. There will always be specialists. There will always be people advising people on what to invest in, what's the right asset. Again, I'm not going to become a commercial real estate expert overnight. I'm going to call Ed to have that conversation on how to think about investing there and where we should deploy capital. But bringing the buyer and seller closer is better for everyone. It's inclusive. And again, this should increase asset prices. It should increase liquidity and should open up an entire ecosystem that brings so many more people in the world into an inclusive world. You brought it up earlier. People can start, Acorns is doing this a little bit, but they're doing it with sort of investing 50 cents when you buy a coffee and rounding up to buy a Vanguard ETF. Well, Vanguard ETFs are sort of interesting, not really. Other asset classes to that same idea, where you could round up your paycheck by $1.50 and invest in Bitcoin, invest in venture, invest in commercial real estate, these things that you can start to create a savings for yourself with the smallest amount of money, no matter where you are in the world. And that's what we're excited about building and bringing. and ultimately allowing folks, for example, at Red Swan, to allow that investment to hit people in Asia, and bringing those together through our platform or different digital security exchanges.
You know, you're music to my ears, what you're talking about, because when we first met, I always thought that Red Swan is actually a vehicle for bringing high quality Class A projects to the marketplace, for the digital marketplace, for groups like yourself that are acquiring and absorbing this type of product, because you have thousands of investors who want to participate even with a small amount of that investment. But we need to supply the industry with good quality product, and we're really happy to be one of the first out there doing this. But you know, you're right to the standpoint of the Reg S investor, these international investors. In many cases, they have stronger demand to buy some of the assets we're bringing to the table, just because they're trying to put their currency into a safe harbor. And U.S. is looked at still, in terms of real estate investments, as one of the safest investments on earth. So we're really excited about the Reg S international marketplace and working with you, because you're actually, you know, marketing to this global marketplace of investors, Reg S accredited investors, which makes it very exciting. I think that, you know, it'll be interesting to see, you know, how much Reg S or international investors are coming into digital securities versus, you know, U.S. investors coming into digital securities. But right now, we're seeing a lot of strong interest, and we hope that that's going to play out really well for you. Let me talk a little bit about your tentacles that you have in the industry, because you talk about your network, and you guys are not just acquiring or building a fund, but you're actually, you know, bringing many different types of technologies and partners into the play of digital assets. And I want the audience to kind of understand that, you know, you're kind of a central hub for digital assets. Maybe you can talk a little bit about that.
Yeah, that's a great question. I think you know, sometimes it does, and even when I'm talking to myself, are we doing too many things? Are we touching too many things? But I think it's been the evolution of our business. You know, it started as sort of venture capital to investment banking, and then to issuance and listing securities. Then eventually realized the big idea behind technology, and you know, we have a full stack tech team in house as well. We have a digital advertising and digital marketing team, is building a platform. We really want to be the platform that sort of connects everyone. So again, we'll never be commercial real estate experts. We don't need to be the people producing our own product. We want to find partners like you at Red Swan for the commercial real estate side of our business, and plug into our platform and allow that to connect to investors all around the world. And so the platform we're building is, you know, meant to be the front end to both issuers and investors. And then on the back end, in terms of, you know, whether we're working directly through a broker dealer or a marketplace such as Red Swan or a digital security exchange, we can API that information through and bring investors into these different asset classes. So that's really what we're excited about building. And you know, the exchanges that we're working with all around the world are very excited to work with us, because you know, each of these digital security exchanges that are launching can't do it on their own. And this is a collaborative effort about moving the digital paradigm forward. This is not a competitive effort, first mover advantage by any means. I think there will always be people in their expertise areas, but it's again about connecting the world. But you know, you can't just connect the world like people tried to with ICOs and create a token and everybody's happy. You know, there's obviously regulation. There's a ton of regulation. There's a lot of frameworks. There's, you know, navigating cross-border jurisdictions. There's how do people do clearing, settlement, and trading. There's costs, there's broker dealers. And so navigating all these pieces to the extent we can is what we're trying to build. And like I said, our core has been venture capital. And the way we've built a lot of this is through investing in these exchanges, sitting on their boards, being very active, and then creating this digital asset fund. Because again, people were asking us to create a product that they would be interested in. And then we'd have to outsource the expertise to Red Swan and Ed to figure out on the commercial real estate side. But to bring all those together, the tech piece and connecting is what we're most excited about. And that's really the big vision we have on the longer term. But, you know, we'll always be investing, because that's how we literally can source capital from different places and deploy it in the right places to help build this new digital paradigm together.
Well, you know, you're doing a lot to make things look easy in terms of a graphic user interface for the investor, which is great because a lot of people don't understand a lot of the technology that you're building. But I think in general, what you're saying is that you're making the experience for your investors to come on to be very simple for them to see opportunities, get involved in opportunities, learn about opportunities, and be more diverse in terms of their investments, and even be able to put smaller amounts on a kind of a cyclical basis, just taking money out of their checking account, applying it to your fund, and splitting it up into different types of assets. So eventually, after a year or two, they'll see they have a lot of equity built up in these types of assets. That's a really good thing for the average investor who doesn't know a lot about real estate or other types of alternative investments. So I think that's great. Let's talk a little bit about Lakehouse, Oakland, because this is a very attractive asset, and I think is the type of asset that, you tell me if I'm wrong, that you guys are really interested in. I mean, this is real estate asset that has opportunity zone and portion of it where people actually get a chance to benefit from the capital gains of an opportunity zone, excuse me. But also, the yields we're talking about are fairly attractive for a Class A Type 1 product in the CBD. We're looking at a 6% preferred return, which means that investors will have a preferred payment of dividend before the principals get to share in the profits. It also allows them a IRR that's around 12%. When you look at the 12% IRR in connection with your real estate capital gain tax benefits, I think that's very, very good. And also a 2x multiple. So are these the type of characteristics and performance metrics that Exponential is interested in?
Yeah, it's not only the interesting part on the actual yield, which I'll talk about in a second, but the fact you're investing in an opportunity zone. I think the reality of it is that being able to do good and generate returns at the same time is something very powerful and close to us. I think in terms of the 6% yield, it's hard to find that at all right now. I mean, look at inflation. We keep printing money. What do you want to own? Assets such as this, and being able to get a 6% yield. It's also preferred. I mean, it's really hard to find literally that many other assets that would give you that much reward for the risk in terms of owning a building. And like you said, in North America still being the best real estate and the safest in the world. So I think those are great numbers. I think the yield is super exciting. I think people, even if you look at people that only look at digital and crypto, you can hardly get a yield and it's backed by more crypto. So I think a 6% yield in a highly inflationary environment where there's literally a search for hard assets, it's a great investment. I'm pretty excited to continue talking about it.
Well, that's true. It is exciting. We're actually putting together quite a few projects with similar types of performance. I'm surprised by how willing some of the sponsors are in terms of giving to this asset class these types of benefits. And I think it's because that the current economic situation we're in with COVID-19 is really starting to create a lot of demand for capital. Either of these property owners have stabilized assets that are coming up for loan maturities. And, if loan maturity is coming up, if you're not hitting the same performance you had 12 months ago due to COVID or due to any other reason, they are a little uncomfortable. The banks are a little uncomfortable, and they would usually want a little bit more cash involved in the transaction. We're also seeing owners of properties that have their equity locked in these assets, at least 30-40% of equity locked, and they would like to pull that equity out to put it to work, buying more assets. So there's a lot of demand from property owners right now to find equity at this level, and they really like the crowdfunding model since they've heard a lot about it through other crowdfunding institutions out there today. But with coupling that crowdfunding with digital blockchain makes it even more exciting because of that liquidity factor. So yeah, we're looking at a lot of properties, and we're excited to be bringing many, many properties like this one to the marketplace for your consideration.
Look forward to digging deeper.
Tell me, Kyle, yeah, I mean, we're going to dig in very deep soon. I know that you're excited about talking about this one and looking at the numbers, and we really are looking at you guys to be major players in our acquisitions of our shares. But tell me something. This COVID-19 has changed a lot of the way we look at our investments. It changed the way we're looking at properties that we were focused on maybe last year, performance metrics we were focused on last year. Has that made any change in your business model, especially as it focuses on commercial real estate, based on what you're seeing today?
Yeah, first, I mean, it's obviously that the pandemic has been an extremely unfortunate event for everyone. I think there's been a lot of shifts. I think the bright light in sort of all of this is the acceleration of digital. I think, I think most investors around the world, March hit and everyone was kind of wait and see, talking to venture capitalists looking to invest. A lot of people were kind of sitting on the sideline waiting to see how long was this? Let's wrap our heads around this. What's the right time? I think some funds were looking to launch. It was a pretty tough time, as you know, right? We all lived through this. Everyone was sort of like just worrying about where they're going to live in March and April. But investing doesn't stop. We've started printing. It's an election year. I mean, there's really a lot going on in the world in terms of how to really figure things out. I think what we've seen is really an acceleration. And look, like I'll pick Bitcoin out of all this because I think the inflationary environment, people starting to understand it a bit more. They see that it hasn't been hacked or crashed yet. It's not, and people are starting to understand it. That this being sort of just one of the front running pieces that really just give blockchain technology. People understand it a bit better once you start to see Bitcoin adopting, and some of that's happened as we've seen this, but I think an acceleration for us big time on the digital side. I think in the midst of this, there's been a lot of regulatory changes that are shifting as well. I think a lot of these digital security exchanges I was talking about earlier are just getting their approvals this year in terms of launching and operational. I think MicroStrategy, $1 billion public company, just invested $250 million of its cash balance into Bitcoin. I think these headlines start to get people to pay more attention and to start thinking about diversifying and really seeing that this technology is powerful and this can unlock a lot of value in a lot of different ways. So I've seen this as an accelerant. It's increased a lot of the conversations we're having with folks. After once June hit and people were like, okay, I think we're stuck inside for a while and, there's still some things to figure out, but we're ready to kind of get active again. We're ready to have these conversations again. Because the world, there's a lot of uncertainty for the rest of the year. But the reality of it is I think it made it more obvious to people that we were going to digital. And it made it more obvious for people that, the old way wasn't quite different. And I'm not saying lots of different things aren't going to go back. But I think the reality of it is people just had a deeper perspective on how all these things interconnect all around the world. And that, I think a lot of people have actually had time to look at their own portfolios and their own investments and their own way to think about savings. And that time has created them and allowed them to start thinking about these things. So, that's sort of the light in the dark tunnel from the outset, in my view, that, and I've seen the accelerant happen, that a lot of people sat on the sidelines and then now people are really interested and they're like, how can I get involved? And going back to your point about making it simple is that commercial real estate can't be a better way to get involved. Like I still tell people to invest, 1%, 50 bips into Bitcoin, for example, just to get a little exposure. But the reality of it is if you want to enter the digital paradigm, commercial real estate is probably the safest thing that you can get to by getting some exposure there. So you guys are in a very great spot at a very great time.
Thank you. Yeah, I totally agree with that. I think the blockchain and the digital aspect of what we're doing definitely makes things a lot easier. I think the performance is much better because you're saving a lot on costs. So I think people are starting to come around to that, and I'm glad that you're there. We're here providing content, you're providing knowledge. The adoption level is starting to really increase just because, like you said, people are sitting at home and they realize that they have two options. They can sit there and wait for things to get better, or they can get busy right now and start being productive. And we're allowing them the tools to actually get busy and be productive and to be able to buy and invest into commercial real estate on a high level that they've never done before. Even if you own just 0.02% of a high-rise building that's generating a 6 cap, and managed by top-tier management, that's still a very solid investment. It's all about the return on the dollar investment, not the size of the dollar investment. So you're absolutely right in what you're doing. And I just want to thank you for coming on to our show and being here today, because your perspective is very important to the future of what we're doing. And I hope that you come back again and look at other projects we have to offer, because you guys are very important in this industry. And once again, thank you very much, Kyle, for coming on board.
Thanks for inviting me, Ed. Happy to be here, and I always enjoy our chats.
Well, we'll do this again, and say hello to James and your team. You guys are great. Keep up the great work. Now we're headed into our Q&A session with Michael Johnson from Urbancore, and also with Kyle Fry from Exponential. So we're going to get into a little bit of the conversation and answer some of the questions that have been provided by our audience. We have questions from our investors who are very interested in the Lakehouse project, and because the two of you here are our guests today, it's a great opportunity to answer some of these questions live. And we're going to start, why, Michael, are you using tokenization for this project as opposed to other sources of capital that you would traditionally see for this type of project? And I think I'm probably best to answer that for you, Michael, since you've hired Red Swan to actually raise capital for this project. And the reason is really simple. National is a multi-billion-dollar company, and they typically bring capital in from various institutional sources like pension funds. But they wanted to make sure that they can now start looking at the digital age and carve out a slot of equity for private capital coming from digital securities. So we thought it'd be great to start this process by bringing in digital securities and allowing that to be a certain level of the capital stack. We're starting out with a $20 million equity slug, and then we're going to do the next tranche at $20 million for hopefully a total capitalization of $40 million. Does that sound about right for you, Michael?
Yes, Ed, and I would also add that the way our joint venture is structured, National, as a joint venture partner, is bringing to the transaction some of their pension fund investments. So this will allow, as you and I have structured this, smaller individual investors to partner with our group, Lakehouse Development Partners, which increases our investment portion of the overall capital stack.
Thank you. Thank you, Michael. Another question that's here is they're talking about the competition in the marketplace of Oakland, California. And we know that Lakehouse is being built at a very opportune time, because you get to really plan a project that is really going to go into the next phase of post-COVID-19. They were wondering how the competition that's going to come in after you will be able to, how you'll be able to survive the competition coming after you based on your vision of the marketplace today.
Well, the first thing I would say is that we have always viewed Lakehouse as a Class A opportunity, mainly because it is unique in that it is the only high-rise building that is entitled and allowed to be built across from Lake Merritt. That alone puts us in a separate submarket from most of the other transactions that are being built in downtown Oakland along the Broadway corridor. So initially, we will be starting construction at the end of the year, which with a 28-month construction schedule brings us to occupancy starting in mid-2023. Well, first, we think there will be limited transactions that will actually start within the next 6 to 12 months, which means that the new product that will come online in mid-2023 will be limited. Lakehouse will be one of those transactions, which in addition to its location in a separate submarket across from the lake, puts us in a unique position to capture some of the potential tenant interests and the demand that will exist at that time. And then as we go into the market, continuing the market beyond mid-2023, again, our positioning at the lake, which is considered one of the jewels of downtown Oakland will be one of our significant benefits to continuing to not only release units, but to increase the rental rates at our property over time.
Thank you. I totally agree with you. And the location of your asset being in Lake Mirror, which is the jewel of Oakland, you're seeing a lot of in-flight from people who are leaving San Francisco and coming to Oakland right now. Timing your property to be in line with that activity, I think, is very good for Lakehouse. And I also think that there's location is everything, and there are not too many sites along the lakeshore area that will accommodate another Type 1 development project without tearing down some significant assets in the area. Is that true?
Well, it's not only a situation of developers potentially being interested in adding additional, Class A Type 1 high-rise buildings, but there are literally no other sites that are zoned for high-rise along the perimeter of the lake. So, and it's not anticipated with the existing inventory of buildings that line the perimeter of the lake that the city will approve any other transactions in the future. There is an existing high-rise building that is across the street from us, which has been in existence for over 50 years. They continue to not only improve their property, but remain at a very high 95 to 98% occupancy, primarily because of the lake. The most searched engine when people are looking for rental units in Oakland, they type in apartments near Lake Merritt. And so we believe that, again, that is one of the benefits of this transaction. But in addition, the design quality of the building, the condo-like features of the property, the larger unit sizes are all the things that tenants are looking for in the market. And if anything, the COVID pandemic has shown us that people are going to be spending more time at home. So the larger units that have been designed in the building in order to accommodate a larger unit mix from millennials to empty nesters, we also think will be a benefit to our leasing activity and our revenue stream.
Totally agree with you. The data definitely supports everything you just said. Let's switch over, because the next couple of questions looks like they relate to digital assets. And Kyle, since that's your center of your business model, this relates to adoption. People are wondering, how fast you're seeing adoption into digital assets, and when do you think digital assets become mainstream here in the U.S. as well as globally?
Well, I'd like to say it's already here now, but I think that's probably because I live, breathe, and sleep digital assets on a daily basis. I think, I think 2021 is a pretty big year. I think, if you look at a lot that's happened, Coinbase is an $8 billion company about to go public. MicroStrategy is a $1 billion public company that just put $250 million in Bitcoin to offset its treasury management instead of cash, because we're printing more, which is, by the way, why commercial real estate is great, because owning the asset is the place to be in terms of appreciation of assets. But, you and I talked about this before, making it easy for people to get in and really simple to kind of get access to it, I think is still what the industry is struggling with. I think regulatory is caught up, but a lot of the trends are really pushing pretty heavy. And, I think what the pandemic has done, and we talked about this a little bit earlier, what the pandemic has done is really have people focus and say, hey, what's our strategy? What's our digital strategy? How do we embark on this? And how do we start using this? And how do we think about this new world as we go forward in terms of investments? And I think that's really sort of accelerating the thinking behind all this. And like I said, some of the, exchanges in the digital security trading space, so like the new NASDAQs, but digital, are just getting their licenses this year and operational. So I think a lot of the thinking, planning, and strategy is happening this year, and a lot of the deployment and execution is going to happen next year. But there's definitely a lot of eyes on this. So pick up any newspaper and think about anything, that the reality of it is it's here. And you guys have launched a platform. A lot of the people are just sort of launching this year and bringing these assets to market now. So, it's really exciting that these opportunities are available now. Now we just need to get the message out and spread the word that it is available. It's not just crypto and ICOs and a lot of the negative sentiment we've had. This is real estate, a real hard asset, and it's available today, which is very exciting. I remember you guys launching, and I was, excited just to get this, because there isn't a lot of places to kind of go find digitized assets today. But I think what you guys are doing is completely innovative and really exciting.
Yeah, thank you, Kyle. That is very true. I mean, you mentioned Coinbase, and I don't know if I mentioned it before, but we just signed a significant agreement with Coinbase to be our crypto custody bank. And we're excited, and they're excited, because now for the first time, cryptocurrency holders will be able to transfer their digital currency directly into digital securities backed by commercial real estate. So it's a way for them who are aware of digital world to be able to now start getting some productivity out of their digital assets by moving from one cash position into an invested digital position of commercial real estate. So we believe that by marketing to this audience, that we'll be able to increase the adoption, because of the fact that they're already aware of what's happening. They already have Bitcoin, Ethereum type of currency, but now can start getting into real assets like commercial real estate and exciting properties like Lakehouse, Oakland. So yeah, I think that's going to really move the adoption much faster. So Kyle, on another note, they were wondering, with your digital asset fund, when do you plan to start deploying some of the assets or the currency in your fund, and what type of projects are you immediately focused on?
Yeah, I'm hoping to, have more insight to that here shortly. I think we'd like to deploy some of the capital part of this year, for sure, before the end of the year. I think, we're pretty set on the venture side of our business. As mentioned, we start as a venture capital fund, but the big anchor as part of our fund is real estate. Like I said, that is the sort of gateway investment opportunity for folks to get exposure into digital in an asset class that they understand. And I think commercial real estate is right up the alley of what we're looking at. So I think probably by the end of this year is how we're thinking about it.
Okay. Michael, you started this project several years ago, and I know you had many hurdles working with the city, getting permission. This is a big project to be able to build in the CBD of Oakland. Now that you've later found out this was in the Opportunity Zone, how do you feel the Opportunity Zone benefits are going to benefit the investors in this project?
Well, Ed, as you mentioned, we have been selected by the city as the developer for this site at East 12th and Lake Merritt Boulevard through an RFP process. At the time, the city wanted us, the requirement was to build a mixed income project, which we're doing. And we were not aware that ultimately that the Opportunity Zone program was going to be part of the new tax legislation. And when we became aware of it, we learned that we were just inside of the East Oakland Opportunity Zone boundary. The boundary is literally across the street at the edge of the lake, and then encompasses our property across from the lake, and then goes back behind us to the east into the flatlands of Oakland. So as you know, the whole intent of the Opportunity Zone program is to try to create the opportunity for investment of capital in areas of cities that traditionally institutional capital, private capital is not invested. And the idea is to spur an increase in the tax base in those areas, to increase jobs, to renovate and build new types of projects, not only residential, but other types of industry. And so it will be a benefit to us in that investors in our transaction that choose to utilize the Opportunity Zone tax benefits over either a 5, a 7, or 10-year period can boost their return by their ability to pay less in capital gains. And for us overall as a project, it should stimulate other investment activity to the east of our site, which just improves the overall surrounding neighborhood that we're located in. So we feel like it's a benefit. It is not the transaction is not driven by that, but it does provide an additional boost for those investors that want to take advantage of the opportunity.
Thank you, Michael. Your project is very unique because right now you're one of the only projects that I know of in the Bay Area, especially Oakland, that's absolutely shovel ready to go. Maybe you can explain what you've gone through in order to get to this point, because it will kind of give a barrier to entry for the next project in the area based on what your experience has been.
Well, as you know, in California, there's a long lead time between initial site identification and conceptual design and actually putting a shovel in the ground to start construction. We have to go through a very rigorous process here to get a site entitled and then to get a site permitted. So we have been really underway for several years, first getting the entitlements approved through a very rigorous process that there was actually opposition because there were people who wanted the site to be built with only affordable housing, whereas the city's objective was clearly a mixed-use, mixed-income transaction. So once we got through that entitlement process, then we started into a process where we pursued a HUD FHA 220D4 loan for the property, which is a really attractive construction to permanent piece of financing. That's also has a long lead time. It took us approximately 2 years to get through the entire pre-application and final application process. And we actually received our commitment from HUD in May of 2020. So there's a lot of credit goes to the HUD administration for working through the first quarter and the second quarter, once the pandemic hit, in order to finish up and process our firm application and commitment for the project. And that's we understand that to be the largest new construction loan under this FHA program that HUD has ever approved, which is $134 million. And so now, having gone through those two aspects, we applied to the city in December of 2019 for our building permits. And so over the last 7 months, we've been involved with a back and forth review process with the city. We just completed our third round of permit comments, and our project will be permit ready by the end of or middle of September, which will allow us to pull our permit at the time we close our financing, which is scheduled for the first part of November of 2020. So, those in the development business know that it's a long process. Throughout this, several year journey, we've also seen a rise in construction costs in the Bay Area, and that has started to slow down the number of new transactions that are occurring. We have done a pretty good job with our general contractor, Clark Construction, which is one of the largest general contractors in the country, operating in all of the major cities throughout the U.S., of buying out the major trades that make up the overall construction budget. So that has allowed us to control the cost and finalize our GMP contract in order for this building to start at the end of the year.
Well, thank you, Michael. This next question looks like a potential tenant who might want to live in your project once it's completed. They're asking, how are you going about selecting the tenants for the affordable component? And I'm very curious about this because Kelly and I are looking for a secondary place to live in California as well. So I want to understand your response to this question.
Well, first they have to, commit to being a Warriors fan and a San Francisco 49ers fan. And once we get that,
I'll get some out.
once we get that commitment, uh, then it's really on a first come first served basis for tenants to select a unit. With a 26-story building, you have different locations in the building. Fortunately, the way our building is designed and positioned, there are views on all four sides of the building. So we won't have what sometimes occurs, where you have views off of the back of the building versus views off the front of the building. We will have outstanding views at every floor, given the topography of the site. We sit up higher than the edge of the lake. And so people will have views not only to the lake, but to the Oakland Hills, to the estuary, and to downtown San Francisco across the bay. And so then they'll be able to choose not only what views they prefer, but what floor plan. We have a mix of junior 1-bedroom, 1-bedroom, 2-bedroom, and 3-bedroom units. So depending on the size of your household, you can choose. And at the different floor, units are priced differently. And then the 20th floor is a unique floor in that it has a community lounge, a very upscale community lounge with a large terrace that will be available to all of the residents in the building. So even if you live on the 5th floor or the 7th floor, you'll be able to go up and partake in social activities on the 20th floor lounge. And while I'm at that point, I want to mention, as a Class A building, we are also incorporating all of the necessary amenities to attract the market. Starting at the second floor, starting at the lobby level of the building, we have a large business center. With the recent pandemic, we've seen people working from home a lot more. Our business center will provide opportunities for people to reserve individual conference rooms of different sizes. We have a theater. All of the components of a business center that anyone needs are available. We also have a music room that allows people to, work on their rehearsal of their activities at that level. At the second floor, we have another community lounge with games. There's also a fitness center and a yoga room. There's outdoor barbecue areas and fire pit areas, all in close proximity to a very nice pool. And then lastly, as I mentioned, on the 20th floor, we have the 20th floor lounge, which has a private kitchen and a private screening room also. So all these amenities will contribute to a lifestyle for people that rent in the building, which we think will attract residents and will compete with any of the other high-rise buildings, both in Oakland and in San Francisco, and yet will be priced at 10 to 15% lower than the high-rises in San Francisco.
Interesting. Maybe you can tell us on the low end with the affordable what the average rent is going to be, and on the high end on the 20th floor what the average rent is going to be.
Well, our rents are just under $5 per square foot on average. At that average, which would say be somewhere with a 26-story building, somewhere around the 13th or 14th floor, those units will rent from, $2,900 for a junior 1-bedroom up to around $6,000 for a 3-bedroom unit. And then given that that's the average, the range typically changes from $50 to $100 per unit per floor. And so you'll have some junior 1-bedrooms at the lower floors that'll probably be in the $2,400 a month range, 3-bedroom, 1 and 2-bedroom units in the $4,000 and $5,000 range. And then on the upper floors, when we get to the floors where you and Kyle would like to be, the 25th and 26th floors, the rents will be, a little bit north of that. and it just depends on what unit size. But as an average, our rents will generally be between $3,000 and $6,000 a month. And typically that's about $4.95 a square foot. And in San Francisco, properties are generally $5.50 to $6 a square foot.
Thank you. Kyle, I know you've looked at some of the attributes about Lakehouse, Oakland, and I'm just wondering if you could maybe answer the question as to what attributes you see about Lakehouse gets you excited for your fund, even if you may not be investing in Lakehouse, but what attributes are you looking at that are similar in Lakehouse that you are going to look at in other similar types of projects?
Yeah, I think the yield is one. I think that's always kind of a centric sort of investment point. I think the opportunity zone is very interesting to us because, like I said, most of our investments we tend to want to have a positive impact as well as generate high returns. And I think people more and more are figuring out that actually is the case in the world today. You can actually have both. You can have your cake and eat it too. You can invest in something that's meaningful as well as generate returns. In terms of, some of the pricing and the real estate, I think that's what I'd have to look in specifically on Lakehouse, but would like to see, some of the comps that they're thinking about. I think, Michael, some of the just getting it to the stage you got it to and some of the pricing metrics you brought forth, I think make it super interesting as well. I think something like this doesn't come on the market that often. How much of it is available to, this accredited investor versus institutional, and actually seeing the stack of the capital and knowing who and how it can come through. I think I'll want to see a bit more of those details because, if that slug's bigger, maybe that's more liquidity that allows a bigger investor pool, which could increase the price of the asset. So I think some of these levers move up and down how to think about appreciation.
Well, thank you, Kyle and Michael. We are out of time for the rest of this program, but it's been a very interesting day with you. The content that you both provided has been outstanding. I want to thank you very much for your participation. We're looking forward to selling out the Lakehouse Oakland project. We're very excited about this asset. It has many attributes. We think that being shovel ready and ready to go is very inspiring to many investors because there's always risk in building a new project, but you have already surpassed all that risk and ready to go. So we look forward to it. We'll have you back after it's built to talk about the success of Lakehouse, and maybe Kyle, you can come back and talk about how many shares you've already invested. But until then, I want to just say thank you guys, and we'll see you again soon.
Thank you, Ed.
Thanks, Ed. Appreciate it.
That concludes our presentation on Lakehouse Oakland. If you're interested in participating in the investment opportunity for Lakehouse Oakland, I do want to make sure that, as a disclaimer, we're not selling securities online right now, but you will be able to log on to www.redswan.io. We have a very quick registration process, pretty much your name, your email address, and your phone number. You can get right into our site, download all the files for Lakehouse, and start your due diligence work. Once you finish your due diligence and you have interest, and you want to let us know your level of interest so that you can now be one of the pre-buyers for these securities, you can just express your level of interest, and one of our representatives in our RA department will contact you to consummate the sale transaction. Thank you very much. We do have one other project coming up, which is going to be next month, September 25th. That is a beautiful asset at Rice University. It's called 1717 Bissonnette, and the sponsors are the Buckhead Capital Group. They will be here, both Kevin Curtin and Matthew Morgan, who are the principals of Buckhead, will be here to discuss that project. So please come back, dial in, and we'll see you soon. Thank you.